Carley Garner is very well known. Kramer uses her work. She's on every financial station with her charts and technical work, and it's great to have you back, Carley. Uh,
Thanks, Dale.
I,
Appreciate
I,
it. You ready?
I
Should I share my screen?
yeah, yeah,
Okay.
you can share this. I was thinking about
Good.
you once gold made a new high,
Oh
because
man, go.
I made some
Yeah.
attempts there too. Uh, what's in the playbook
Well,
now?
let me just get to be 100% honest, we're pretty skinny right now. We've kind of peeled most of our positions on. We have a couple stragglers that are struggling a little bit, but fine, I'm not worried about. So we'll talk about some of those. But I'm not honestly, we're mostly on the sidelines and waiting for the fireworks so that we can hopefully get something done at some good pricing. I've got the
Okay.
10-year note futures monthly chart up here because you guys were discussing that. So I decided I'd start there. I'm not going to, you guys kind of covered all that, but I will just say it's really important to put things in perspective. Obviously, everything in real time, everything feels dramatic and scary
Yeah.
and big. But if we look at a monthly chart, we can see the 10-year note future. And even if you look at the yield's a little more dramatic than this, but we've really gotten nowhere in 3 years.
Yeah.
We've just been trading sideways. The real tough market was back in 2021, 2022. That was
Right.
just a complete free fall. I still have PTSD from that. So if we're talking about investing, not trading, which is a whole different thing, me and my personal investment accounts, I'm buying as
You're buying
much as I
bonds.
can. I'm buying duration.
Are you
Now,
staying at the 10-year, or are you going further out?
going further even. And I think in the short run, I probably feel some pain in the short run, but I'm not worried about it. The way that I'm looking at it is the US has its problems, obviously. I'm not here to defend any of those, but when I look around to, anywhere else, we are the least dirty shirt in the hamper.
Here
You
we
get a
go
higher,
again.
you gotta get a higher yield and less risk. There's a 99.99999% chance you're probably going to get your principal plus your coupon payment back if you just hold on to the bond forever. Um, I think it's a good deal. 5 or 6,
Okay.
5-ish%, I'll take it. As a trader, we did try to buy futures a little early in the 10-year note, but we are also long a put. So we have like a synthetic, and we're just planning on riding it out. I honestly think we could see as low as 105 in the 10-year note, which would be pretty big uh, drop
Yeah.
just from here. But we have a put, so I'm not going to sweat it out. We'll just
Because
wait and see.
TLT
Mhm.
has already taken out the lows from 2023,
Yeah,
right?
the
And the
TLT is a
notes
little
haven't.
different.
Yeah.
Right, correct. So
Okay.
we're just waiting. We'll take our medicine in the short run, and if we're
Let me.
talking 3 months, I think we're higher.
Okay.
Hmm.
Do you think that a stabilizing dollar, and I don't think we've seen the lows yet. Some people think about it, but I'm thinking
Hmm.
96 ish in
Hmm.
there, and we get that would at least complete wave one down. That a bear market
Hmm.
rally in the dollar would help the notes and
Um,
bonds.
yeah, I don't think it would hurt. I think what we're experiencing now is it's people are people are transacting not because they want to, but because they have to. So if we're talking about notes, um, there's a lot of things going on, but there's basically a sell America trade where, all this
Yeah,
money flowed into America, now it's got to go out, and it's kind of indiscriminatory. They're just selling it they're just selling, and then they'll figure it out later. And I think what's going to happen is once they pull everything back, they're going to realize grass wasn't greener on the other side, and maybe that wasn't such a bad situation in the first place. That's my opinion. Um, it also with the Moody's downgrade, probably a lot of mutual funds or even, overseas buyers probably have stipulations in their prospectus where they have to have certain percentage of certain grades. And so I'm sure that's part of it as well. So it's probably some forced selling, to be honest. And it may not be done because when these types of things kick into play, and I will point out one more thing. Most people don't think about this, but I do because we're a futures broker. The markets, when they pick a direction, they press it into expiration. So tomorrow's expiration of the June options for Treasury futures. And then the week after, we're talking about first notice day for Treasury futures. And generally you get a real big price squeeze going into that in whatever direction the market's going. So I suspect that's probably what we see. So we're probably not done selling off, probably get some sort of last hurrah hoopla here in the next couple of weeks. And then I think it's going to be a maybe a generational buy. Who knows?
Well, I know that there are some cycle groupings early to mid-June
Yeah,
that I'm looking at. So,
that would
okay,
make
so
sense. Okay.
long treasuries, and you might be early, but you don't care.
That's right. And like I said, we're long puts as well. So if
Okay,
no harm, no foul. If it keeps melting down, it's not pretty to look at on the screen, but we're protected. And we might even look to we have September futures and September puts. If it gets bad enough, we might look to take a profit on our put and maybe buy something short dated so that we swap our intrinsic value for extrinsic in a smaller amount, but that'll be down the road.
okay,
So this is the dollar index. I'll just go briefly because you guys covered that very well. I agree. I don't think I'll first point out Trump 1.0. I think I showed this last time I was on here. The last time Trump was in office, we dropped from 103 to 88. So, and
mhm,
the exact same trend line reversed the market here. Started a little higher, but I think we're looking at probably 92 to be honest. I think we go back to this trend
wow,
line. So Trump 1.0, we've traded between these two trend lines, and the same trend lines I think are going to come into play. How it gets there, it's not going to go straight down. It's not going to be easy money or anything, but I think that's the big picture. Um, okay, let me go to something
okay,
maybe you haven't talked about in a little while. This is crude oil.
I'm in it. Can you get it to
Oh,
80?
well, I think we're going to 52, 48, somewhere in
All
there.
right,
So
all
eventually we'll
right,
see 80 again, but I don't think it's going to be
all
before we
right,
see the 40s.
all right.
Um, so there's obviously a lot of fundamental things going on. Iranian oil probably comes back online. But I think the big story is the OPEC put was removed. OPEC's worked really, really hard to keep oil above 65. This blue line is 65. For
Yeah,
years, we held 65. Speculators got in the habit of buying at 65, and OPEC defended it. They've decided, forget that. They're giving up too much market share. They're not a charity, you know. So they're starting to hit the gas. And we're seeing demand probably pull back a little because of all the uncertainty with tariffs and all these other things that are working its way through the system. So my best bet, my thought is 65 was the floor for 3 years. It's probably going to be the
yeah,
ceiling for now, unless we can
yeah.
get
It's
over
failed there
65.
twice.
It
Failed there,
has.
yeah, around 60. Well, I mean,
Yeah.
depends how sharp you draw the line. I
Yeah.
have it like at 63, but
Right.
yeah.
It's a little
But
messy is with the continuation charts and stuff, but
what if
correct.
it
If
got
it, Mhm.
above that spike high that we
Okay.
saw yesterday? That
So if
then what?
if we if we start trading above this line, and again, this is an art, not a science. 65 might
Right,
mean 64,
right.
depending on. But
It's a
if we
mattress.
it is if we start getting up above that, I would say this line's probably gonna keep it intact. So we're talking that
Okay,
probably comes in around 73 at this point. I
okay.
need to update that. Sorry, about 70, 72, 73. So that's possible. Probably going to take some sort of news shock for that to happen. But even if that does happen, I think the big picture is we're going to
Lower.
grind lower. Yeah. Last time Trump was in office, and let me pull up a monthly chart. This is monthly. I've shown this on here a few times, and we just keep going over it again. But last time Trump was in office, oil spent most of its time below 65. So while we think 65 feels cheap, it's actually maybe not so cheap. But that was kind of a
Yeah,
neutralish price.
and
We
then
got
COVID.
obviously much, much lower. Yeah, COVID's an outlier, obviously, but uh, reality is 65 isn't as cheap as it feels. And in fact, I think, like I mentioned before, I think we're going into the low 50s, maybe 40s. And I'd probably be a bull there. If we got to the 50-ish area, I'd probably turn bullish. And I haven't been bullish in years in crude oil. So it'd be kind of it'd be a pretty big switch for my mental situation. Um, okay, let's look at something else here. I'll also look at natural gas since we're in energies. Natural gas, the big story is AI, energy usage, LNG exports, and I think all of those things are going to keep natural gas bid. but I don't think we're not talking $7, $8, $9 natural gas. I think those days are really behind us, at least unless something really I mean, you have to keep in mind to get to $10 in natural gas, we had um, a major global pipeline sabotaged. That was a lot of things that's probably not going to happen again. But
Mm.
I wouldn't be shocked to see natural gas continue in this range. So if it gets into the $3-ish range, it's probably a pretty good buy. In fact, we're looking at a place to buy here in the next couple of days, and with the target of somewhere in the $5. So keep your
Yeah, it's a nice
expectations
trade.
intact. Yeah, it's actually
Uh,
been a pretty well-behaved market recently, which is nice.
how are the options? Are they liquid?
They are pretty liquid. Now it's tricky because there's two sets of options. There's American options and European options, and most people don't even realize there's two options listed. So same expiration, same strike price, different market, different exercise rules. Stick with the European. So when you pull up your brokerage account and you start looking at natural gas options, make sure you're looking at European because they're at least 20 times more liquid. Like it's a huge, huge difference.
Okay. Okay.
But yes, they're very liquid. 24 hour,
Okay.
23 hours a day, they're liquid.
That's interesting. They
Yeah,
never used to be.
correct.
You have a view on gold now, Carly?
I do. I do. And my view hasn't changed. It's been very, very noisy. Oops.
Yeah.
Very
Noisy and
noisy.
parabolic like a rocket.
Yeah. Look, I'm not gonna lie. We had some trades on that took quite a bit of heat. We ended up working out of them. It ended up not being that bad. We're looking for a place to get back short. I think uh this is, in my opinion, this is a blow off top. Did it go higher than I thought it would? Yes.
Yeah.
Do I think that changes the bit, what happens in the next year or so? No, I don't. I think this is a repeat of what we saw in 2011. And I mean, I don't know if you've talked to people around, but I haven't talked to a single person. I mean, retail trader,
No, it's bearish gold.
fund manager, nobody's bearish. Even like my mom and my aunts and uncles are asking about
Oh, well,
gold. So
that's a for sure sell
exactly. I mean,
when
this
mom
market's
liked it.
toast. Right. Exactly.
I, I've
Yeah.
seen numbers like 2,700. So
Yeah.
and then maybe 25. So your
I
numbers are a little different than
Yeah,
those.
now this is a monthly chart, and we're not talking, it's not going to go straight, even
Yeah,
if I'm right, and I might be wrong. But even if I'm right, it's not going to just be a straight line, and it's going to take a long time probably to get there. But I think we fully basically round trip that breakout that we saw in 2024. A
yeah,
lot of people they act like I'm completely insane when I throw these numbers out, 2170, 2000. We were just there a year ago. It's not markets revert back to where they were a year ago all the time. We just saw it in the stock market. It seems impossible in real time, but it never is. It
yeah.
happens way more than you think it would. And
Reversion trades.
it does, yeah. And when everybody and their dog is long and bullish, and yeah, I went on another podcast and talked about the idea that maybe gold prints into the low 2000s, and I literally was like, people were calling me derogatory names on Twitter. I mean, it's crazy. People are really emotionally tied to this. So it's
Yeah,
probably
no
done.
matter. Yeah,
It's probably done.
any position that they have, they're like that.
Yeah, that's true.
How about S&Ps, Carly?
Okay.
Was April the low?
Um,
Tough call.
I, yeah, it's tough. I think we have a pretty good chance of making a new low, a slightly new low, like somewhere around here, somewhere around 40.
45. 40.
40, 45, 43 is possible if we go down. Let me spread this out a little bit. I was thinking more of like this 200-week moving average, somewhere around 47.50. We were almost there
Yeah,
on that sell-off. That was so quick. I mean, obviously, we all experienced it. It was so fast and so quick. And I think it was just the futures that got here. I don't think the cash market printed
yeah,
down in the 48s. And it just feels like we weren't quite done testing those levels. I think we go back down one more time, but this is a tough market. We just to be for full disclosure, when volatility was really high here, we put on a put butterfly because the vol was so high. For $1,000 you could get a really wide spread. I think it was like a 300 point spread. So we had
mhm,
massive profit potential for only $1,000 risk. And we tried to get cute and adjust it by buying our short puts back and then selling a call to replace that premium. And we kind of took a little heat on the call. It's looking fine today, but
Yeah.
probably tried to get too cute. But this is a tough market. I've never seen anything quite like this. I've seen a lot of markets. This is a really wild one.
Down 20% and then recover
Yeah,
18% in a month.
yeah. A bull
Yeah,
market and
that's
a bear market. Yeah, it's
yeah,
silly.
all within a month. Yeah.
Yeah, silly.
One of our attendees is asking if you would please show Bitcoin if you have anything on.
Um, it's
If you
been
don't,
so
that's
long.
okay.
I don't
Yeah.
think I do. I
Okay.
I don't. I don't
Well,
I
we
don't really
tried.
follow them.
We tried, AJ. Uh,
Sorry.
okay. I can't. Okay.
This is
What
the
else?
NASDAQ. This is the
Okay.
NASDAQ if you want to take a peek at this. It's pretty similar. It's hard to fit this chart because it goes back so far, so I'm just going to do basically the NASDAQ. We don't follow this as closely as we do the S&P, but we watch it just for like directional, especially because it's been kind of driving the market. But
Yeah.
NASDAQ needs to stay above 18,750. That's the long-term trend line. In my
Yeah.
view, we had no business breaking up above it. We stayed there for several months. Now we're back above it. I don't think that's going to hold. I think we fall back into line, and it might be the interest rate uh, squeeze that kind of pushes us back into a more natural trading zone. The reality is this is how the Nasdaq should behave. This is a normal market. And then once we got all the COVID stimulus, it started doing things like this. That's really not
Yeah.
healthy or natural. It happened. The market's always right,
Hmm.
but there was some weird underlying things going on there. Um,
Okay. Someone's asking gold silver ratio. Are you following that for any tells?
uh, I do follow it, and it's obviously extended. So the kind of the consensus is that silver needs to catch up with gold,
Right.
but I think that's the wrong way to look at it. Um, Let me see if I can find this chart here. Nope, I'm not going to waste too much time looking for this one particular chart,
Okay.
but maybe I can find it. Well, I'll just go back to silver.
Okay.
So my thought is like in 2011, it was silver that took off for the races, and everybody said, well, gold has to catch up because the gold to silver ratio is off. Gold
Yeah.
needs to rally to catch up with silver. And the exact opposite happened. They both sold off. Silver sold off more than gold. So the ratio came back into line, but it wasn't because uh, the weak the weak metal caught up with the strong metal. It was the strong metal gave up enough
Yeah.
to get back down to the weak metal. And I think we're going to repeat that. So I don't think silver catches up with gold. I think gold rolls over and they both go down together. Silver maybe doesn't give back quite as much, but I think the ratio comes into line with the metals sell-off, not the other way around.
Okay. I'm getting one more request, and it says
Okay.
Dale looks like Carley follows yen.
I
Um.
do. Oh, I do
Okay.
have a Bitcoin chart. You can see how closely I follow it. I just noticed I have it labeled there. That's my Bitcoin chart. I don't look at it.
Okay. Yeah.
Okay.
Throw. We have a throw over. Go ahead.
Yeah. Okay. So the yen, I do follow the yen very closely, and obviously there's a lot going on with the yen. It was the carry trade in August that triggered
Yeah.
a bunch of chaos. We're getting back to where we were in August, but the market's adjusted and we're a little more prepared for it this time around. But eventually, like if the yen keeps creeping up here, I think it's going to start putting pressure on things. And I think we're seeing that that's part of what we're seeing in the interest rate market is the unwinding of the carry trade and these sorts of things
Yeah.
kind of working their way through. So I actually think the yen's bottomed. I think we're probably going to go a lot higher than the BOJ wants us to. So my first
Okay.
target's
So
about
that
80.
means
Yeah.
so that means even though JGBs are exploding in yields, kind of like what's happening here,
Hmm. Right.
the dollar's weaker despite higher yields, and the yen will
Hmm.
be weaker despite higher JGB yields.
I think so. So this is a futures chart, just to clarify to make sure everyone knows what I'm looking at. This is a futures chart. It's the inverse of
Oh,
if you're
okay.
looking at Forex. So it's confusing.
Yeah.
And as a futures broker, that's what I do. One
Yeah.
thing that I find very interesting is the yen peaked here. The strength yen was the strongest it had ever been during the heart of the financial crisis because the yen was seen as a safety currency.
Right.
But I'm thinking we're probably getting the exact opposite of that. Like we're probably now we're in peak euphoria. So we're not in a financial
Yeah.
crisis. We were in the opposite. A few months ago, it was, the golden era and this and that, and everything was roaring. And that's
Yeah.
probably when the yen bottoms. And so I think we're in this big decade-long cycle. Yen probably bottomed, and we probably go up from here.
Higher yields, higher yen. That correlation.
Mhm. Yeah.
Okay. All right. Where can people find your great work besides all the television and financial stations that you're on?
Okay.
And Carley does futures options. I'm sure you've gleaned that by now. So
Right.
she's obviously a risk manager. As you can
Yes.
tell, she covers her position with options so
Well,
that if she's
yeah.
to a degree.
Correct. And because I've learned my lesson. My personality doesn't fit for futures trading. Like it stresses me out. And so I try to I put together strategies that don't stress me out as much. Then I don't make bad decisions, or I still might make bad decisions, but I'm not as prone to it. So that's the goal. And so we offer our clients um, commentary, trading ideas, things like that. We are a futures and options broker. We only deal in futures and options. You can find us at decarleytrading.com. And we're a teach as you go type of brokerage. So if you feel lost at first, don't worry. We're going to walk you through it.
Okay, and there you go.
Yeah.
Check out her free commodity newsletter and
Yep.
her ideas. And if you're interested in futures options, here you go. You have someone that's going to actually give you full service. Okay,
Correct. Yeah.
instead of you just clicking the mouse and hoping.
Right.
And
We do
that
offer online trading. So a lot of our clients are clicking mouse, but the difference is they know they're going
they
to get
can call.
information from us and they can call or email and we're going to answer the phone. It's kind of a
Right.
interesting concept.
So if you still like trading with human beings
Yeah.
while it lasts, give Carley a call.
Thank you,
So,
Dale.
all right. So, thank you very much, Carley. Great
Of
to see
course.
your charts again, and hope you have a great summer. We'll talk probably in August, see how things are shaking out.
Let's do it. Thanks for having me.
Carley Garner, everyone, and you can follow her on X at Carley Garner, right?
Yep, that's correct. At Carley
Uh,
Garner.
yeah, at
Yep.
the minimum, follow her on X. And Laura's saying you're always interesting to listen to, and John's thanking you. So
Thank
remember,
you.
don't just count your charts and your candles, count your blessings. And I'll see everyone tomorrow. You can join the team in 20 minutes on the morning edge. Adios, everybody. See ya. Thanks again, Carley.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.